Hi everyone, and welcome back to the channel, and welcome back to another video. Today's video is all about Moonbeam. Our last market update was on the 18th of September. Before that, major rise to the upside, retrace, and then an extra rise to the upside, considering where we're sat now, about 80% to the upside from where we made that video. A lot of people back here calling the project dead, which is why we made the video saying, is Moonbeam dead? Is it ready to rise? And we talked about these exact moves to the upside, a break of the trend to the upside, coming back down, and then rallying on to the upside, which, as you can see guys, was 2 months ago, 18th of September, talking about this parallel structure, getting a trend line break to the upside, a retest, and then continuation to the upside with much higher targets, very much minimum 68 to 70 cents to the upside. And as you can see guys, jumping back into the charts, that's exactly what we got. We got the trend line break to the upside and the retest before continuation to the upside. We didn't quite get to them 14 cent levels. However, all we was looking for was the trend line break and retest and continuation, which we've gotten from the lows. We're talking about an 80% move, 70-80% move up to that upper bound range that we're looking for on the lower time frame. We're talking about another 100%. So the risk to reward, when it comes down to it, it's not as good as it was down here when we're saying, you know, the project's not dead. We're looking for these moves to the upside. Now the big green candles come into play. Everyone wants to come in and buy, which is normal. It's normal in the markets. It's a psychological thing. But we've talked about these big bearish candles and big bullish candles and the breakdown levels, and this was going to be a really key level to come back and get a bit of price action around, which was offering that 100% move. So these are all things we've talked about, all things that have transpired. So it's really great to see. I have put on my Patreon a bit of a higher time frame entry and exit strategy. Obviously the entry strategy has already been completed with the break and retest, and now we're talking about exit strategies with percentages at certain levels and what I'm going to be doing as time goes on for Moonbeam, because as you will tell, we've got much higher prices in my opinion to go. However, an exit strategy and a plan going forward is very much vital when it comes to extracting profits from the market. If you don't have a plan, when are you ever going to succeed without a plan in this market, unless you get a bit lucky? But if you do get lucky, the chances are you're probably just going to give that money back to the market anyway, which is why I like to show my entries and exit strategies over there on my Patreon. Just a quick word on the Patreon. A lot of people have been asking, you know, what can we expect from the Patreon if we do sign up? So I've got an educational content side where I go through Fibonacci, Elliott Wave, and things I like to look for in the market. Little tips and tricks that I've learned throughout the years in the market. And then I'm covering altcoins, Bitcoin, higher time frame, lower time frame, entry and exit strategies for certain altcoins that I've got set out, and the plans that I've got set out to do in the future to be able to benefit from this market and not just give all our money back to the market. So, and of course anyone can message me on there with requests and things like that. So yep, it is $10 a month, so about the price of a coffee for a week, $2 a week, so not too bad. If you are interested, it is just Crypto Ryan 17. Jumping back into the Moonbeam chart, one thing that I think many people may be looking at here is the potential inverse head and shoulder that we've got here, with a left head shoulder, right shoulder, and the target to the upside from the downside to that range that we're looking at would be another potential 72% move, which if we just lower that range down here and look to the left, is there any confluential zones at that level? And I think it really is quite a confluential zone with the price action that we've seen in the past. We've got the range break on the lower time frame with the bearish candles there, lots of price action in and around this area, and of course it comes into that higher time frame middle bound range that we're potentially looking for, that we outlined on our last video, coming in around the 50 cent region, before then potential fifth wave into that 65 to 68 cent region. So one thing we need to be looking out for now on the lower time frame is a lot of people are going to be seeing this setup, and we see these ranges get manipulated quite a lot. One thing I would be expecting on the lower time frame is, you know, a potential for this to be a bit of a running flat where the range break gets to the high, and then we come back down and take out a lot of those longs. And one thing we can do is just take a little bit of a trend based Fibonacci to a potential high there, and that gives us another zone down at that 23 to 24 cent region, which coincidentally aligns with that region that we've been working out for quite a while for Moonbeam, with lots of bullish and bearish candles in and around that area. So I do think a bit of working out needs to be done here for Moonbeam before then working its way up to that 70 and 60% rise to the upside at around 48-50 cent region, which if we just take a nice zoomed out perspective here, we're still really low when it comes to Moonbeam and where we can be and where we have been in the past. So one thing I want to do is just take a little bit of a Fibonacci retracement from that final range high all the way to the current low that we've got. You can see we're working out the 38 and 50% region, but you know, when we're talking about high levels, that 1.618 up and around $1.20, look at where that aligns, right at that cluster of consolidation before the major breakdown. A lot of empty space up here, in my opinion, for a low market cap coin like this. I do think that $1.20 region is going to be the one that we're targeting, but on the lower time frame. We just need to work out them 50 to 60 cent regions first, in my opinion, because a lot of people after a 200 to 300% move absolutely love to end up buying the high. So let's say we get a nice 5 wave move, something like that, to that 60-70% high from this current level, and then get a nice retrace back down. So if we do take the trend based Fibonacci now from the current low to a potential high around that 60 cent region, let's see where that low would have to come down to align with that $1.25 region. These are all little bits of confluence that we can get in advance. So you can see how if we was to get that rise to the upside and get that 3 wave pullback, then we'd potentially be looking for that 5 wave move all the way back to that $1.20 region. And whether that's an impulse to the upside or whether that's just a 535 and we've got a correction to the upside, it wouldn't matter too much, because at this point we're able to extract profits. We're able to really stick to our game plan that we've been putting on the Patreon and really just extracting profits. The higher we go, the more profits we'll take. And you know, you could see how this could potentially be an even higher time frame inverse head and shoulder for the higher time frame targets even further to the upside. So let's take a little look at where that target would actually be from that lower bound range to that upper bound range. Let's take it conservatively about that 400% region. From the upper bound range, it really aligns at that $3.60 region, which coincidentally aligns with that 2.618. So I think on the higher time frame, we're looking at that $1.20, $1.30 region, $1.40 region, and then the higher time frame targets again aligning with them clusters of consolidation to the left, up and around that $3, $4 region. So I do think, as people are potentially entering at the lows, we've got lower high time frame bits of price analysis going on here. I do think the higher time frame initial amounts of profits are going to be taken up and around that $1 region, and then that $3.60 and $4 region, which just coincidentally aligns at that 78.6% retracement of the full range high of candle bodies and candle body closes on the weekly time frame. Well, that 78.6 $4.20 region. But like I will say, it's okay mapping out all these targets to the upside, but if you don't have a plan to at least extract some profits to be able to benefit from some retraces, you're not going to do very well in this market, because psychologically, if it's your first cycle or even if it's your second cycle, people can get so much FOMO and so much psychology wrong in the market. Because I've seen so many alts do things like this where they get a nice big rise to the upside back to key retracements, and then you know what, they crash all the way back down. Look at Chainlink and ADA from the last cycle. Just take a look at them charts in previous history. They did exactly this with major crashes to the downside. Imagine not taking any profits on the way up, at least 30-40% at certain levels, and having that plan to be able to benefit from re-entering at them levels before the higher time frame moves to the upside. We've seen it happen in the past. Do not believe that it can't happen again. Just because we're seeing some green candles in the market does not mean that if we do get them major green candles that we're not going to just fall straight back down. It can happen. It's happened in the past. Just remember that. Remember, when you're feeling euphoric in the market and you're feeling like nothing's ever going to go wrong, that often means that there's a big crash just around the horizon and around the corner for market participants that have not been at least extracting 30 or 40% profits to the upside. And people will say, you know, it's stupid, we need to wait for higher, the project's just getting started. And often when you do hear things like this, you'll at least experience a 40-50% crash to the downside, whether it's a major start of a bear market or just a mid-term bull crash. Then it don't matter. You can have that psychology in play. You can have them profits to be able to play around with and put yourself in that risk-free situation. And many people that followed them that analysis from the last bit of price action that we did in September will have already taken profit, bought back, and now be in extreme profit and pretty much risk free. So the higher targets to the upside can be really psychologically stable because we can just wait, we can sit back and relax, let the market do the work, let it do all the chopping around that it needs to do on the lower time frame, mess around loads of people, longs, shorts get manipulated, big moves, late longs, crash back down. It does not matter to us because we've got the plan and we've just put it out on Patreon, our major higher time frame Moonbeam plan anyway. So guys, if you like the video, give it a like. Of course, it's not financial advice. I've given our upper targets. I will also be giving some capitulation level targets to the downside for rebuys if we do get it on the Patreon. But guys, yep, like I say, it's not financial advice. If you like the video, give it a like. If you don't, it's no problem. Many people don't like these videos when I say we can move up and then move back down. People just want to hear that we're going to move up. And the reality is of the market, that's just not the way it works. And 95% of people lose money in this market anyway. So be that 5%, be part of that community that are going to benefit from these market pumps and dumps. Just sit back, relax, let the market do the work. I'll see you next time. Cheers.